Hello friends, welcome to Option Mania. Today we will be learning how to be successful in option trading. So if you know option trading, so there can be two possibilities. First, either the market can go up where we can buy call options, or the market can go down where we can buy put options. Okay, there's a prediction like if some value is like, for example, it's at, let's say, Bank Nifty, it's at 44,000. So I predict that it will go up to 44,500. So now I buy a call option at 44,500. So in the opposite direction, if I predict that the market can go to this point, so I will buy a put option here, and if the market moves in this direction, the value of this put option will increase and I will make profit. And in the same way, if it moves towards this point, the value of this call option will increase and I will make profit. But as per analysis, the option buyers, option buyers are losing 99% of their money. Means 99% of the option buyers lose their money. They don't make profits. Why? Because the movements in market are quite cruel. For example, let's say I buy an option for 100. So let's take an example that this is a part of like 44,000 Bank Nifty. Right, I buy something. Okay, for example, I buy it at 44,500. Then now if I say this market falls 200 steeply, steep fall. Okay, I'm not showing calling this a gradual fall. I'm calling this some kind of this type of increase or fall. So it's a big candle like this. So in this case, this 100 will become 70 or 60 or even 50, depending upon the day on which we are trading. Means more near the expiry, higher will be the fall. So in that case, you lose 50% of your capital, and that's a big number. So if you lose capital, you cannot trade. So you should always try to preserve your capital. So now what to do to avoid these type of scenarios? Okay, so the first thing that you have to do is stick to your strategy. It is very important, right? Sticking to strategy. So any strategy I'm using, I'm just using candlestick patterns, I'm following it, right? So I have to master one strategy. Okay, so I'm following the support and resistance levels. Then if it breaks, I make a buy or call, or I'm doing scalping and sideways market. So whatever is your strategy, you have to stick to it, right? Because you can master one strategy, and now slowly, when you're following market, seeing candlesticks, seeing the market, you slowly get that instinct of taking trades. Okay, you should follow your strategy of taking entries, of taking the exits. So you should be very, very clear in that. No other strategy. You should not learn 10-15 strategies, and in that way, you will be confused what to apply. But if you stick to your own strategy, you will be more profitable, and you will be more confident in doing that. First thing. Second thing, most important thing, is stop losses. Now again, I will take this example. I will delete this stuff a little bit here. So again, I take this example. Let's say again my option is at 100. Now my target is 120. So my stop loss should be 85. So I should not make losses. More than my profits, or it should be more or less equal. Means your maximum loss should be equal to maximum profit if you take trades. And if you are following a strategy, let's say your strategy works for 7 trades out of 10, then if you take a profit, for example, if I take a profit of 5,000, right, per trade, so I should not lose more than 5,000 for any trade, which means if it works for 7 days, so my profit will be like 35,000, right? And my loss for 3 more trades is 15,000. So still I am in profit of 20,000. And if you go the other way, like if I lose 10,000 per trade, right, So I will lose all my money, right? I will lose all my money. I'm not in profit. I will be losses when I see the taxes and brokerage, other stuff. So this is the thing I have to do. Means I should follow my strategy and I should follow strict stop losses. Third, control emotions. So you cannot trade emotionally. I cannot say that, no, I cannot feel the stuff. Okay, feel the stuff means I cannot feel that, okay, I'm feeling today that market will go up, or I'm feeling today that market will go down. This will never happen. The going up or down of a market should be supported by proper indicators, support resistance levels, and market news. See, whatever the indicators are, whatever the support resistance levels are, but if I say market news, okay, market news, it's the driving force for the any index or any stock, right? Because if there is a big news, like for example there is a big news related to banks in which the government induces some money into the banks, then obviously the bank nifty will shoot up. Whatever may be the supports, it will break all the supports, all the resistances, right? It will break the supports, resistances. Either way, there is positive or negative news. So news is the driving force. So you should always keep a look at the market news. Okay, so you have to control your emotions. Once your loss is there, okay, should not wait. Okay, 5,000 loss is there, just sell it and move out. Okay, sometimes what happens, that market takes reversals. It is definitely possible, but 90% of the time I have seen through my experience that market don't take reversals. It's very rare. If you have in a big loss, for example, I am having a trade. I just remove it, taking an example. Okay, I just draw the chart. Okay, so let's say this is one graph and this is a point, okay, at which I say that after this point the market will go down. So I have some strategy so that there is one candlestick pattern that we will discuss in later videos. So we know that now the market can go down. It went down little bit, okay, but it shoots up again. Okay, shoots up again. So I should exit at this point. Otherwise, if it goes to this point, my all capital will become zero if it is expiry day, or if it's another day like Wednesday, Tuesday, then in that case, I'm talking about 7-day expiry, weekly expiry stuff. So in that case also, I will lose my 50 to 40% of capital. That is not good. So I should always stick to this stuff. If the market is like this, I am entering the market here. I'm entering the market here. So I make my sell here. Okay. And also if market enters at this point, I make my sell here, which means this is my stop loss and this is my profit. I'm talking about this, what you say, your put call, right? Put call. And these are the stuff that you have to follow to become successful. And if at all you have made a loss, big loss, for example, you lost of 50% of capital, you put 1 lakh rupees, okay, and you lost 50,000. So now 50,000 remaining with you. Don't try to recover it on the same day. If you made a loss, just stop trading on that day, move to the next day, or take 1 or 2 days break. Look for strategies where you have gone wrong. What was the reason you lost this money, right? And then come back to the market. Try to cover this amount, this 50,000 loss, within 3 to 4 months, not on the same day. It will take time to cover losses. Okay, you have made a big mistake, but to cover that mistake, it should not be that I can cover my mistake in 1 day and then move forward and start making profit. So it's not possible like that. Sometimes it's possible, but most of the time, no. So again, rewinding the stuff, what I was discussing is that first, stick to your strategy. Obviously, master it by doing paper trading. Never put your trades with your money unless you are confident enough to do trading. Second, limit your stop losses. Okay, put proper stop losses so that the maximum loss cannot be more than maximum profit that you are expecting. third, control emotions, and don't try to cover losses immediately, right? Don't try to cover losses immediately. And one more point is there, that you should not look for very big targets. Okay, why? The fifth point, no big targets. Why it's necessary? Because no, for example, I see some analysis charts and prediction models. I also get some messages, mails through different platforms that okay, this is the target, this is buy at 100, aim for 200. But it's not possible. It's not possible every time. Sometimes obviously this 100 can become 500 also, but 100 becoming 200 is always not possible. So you should limit your target. Like 100, the maximum target should be 150, 120, 130, depending upon your loss and profit ratio. Which means if you are known able to register loss of 10%, then you can go for a profit of 20%. So this should be the ratio. So this is all about being a successful trader, which means by following this strategy in your trading career or business, whatever you can call it, you can be very, very successful. So thank you all for watching the video. See you in the next video. Thank you.